Good morning. This is Amit Sinha. I'm a group head of telecom media tech at DBS. Welcome to DBS workshop at Singapore Fintech Festival. Today we'll talk about accelerating the growth of digital economy in Asia. Post-COVID, what we observe is there's a tremendous acceleration of digitalization of economy in Asia, contributed by few factors, including number one, work from home or work from anywhere. Frequent shutdown closure has forced businesses to move to online platform. A lot of businesses have moved from brick and mortar to click and mortar. Third thing, contactless payment and innovation in the financial sector, including blockchain. All of this has contributed to acceleration and digitalization. If we look today, the current digitalization rate across Asia ranges from 10 to 20%. The size of digital economy in China today is about close to 2 trillion. India is about $250 billion. In Southeast Asia, about $150 billion. Based on the current pace, we believe this economy, our digital economy, will grow to about 5 trillion in the next 5 years. With China alone becoming 4 trillion digital economy, India about close to $500 billion, and in Southeast Asia. And what it will do is it will create close to 200 unicorns in Asia. Now, what is the role of DBS? We want to become a catalyst in the development of tech companies as they move towards unicorn. Help them support the growth. Help them enabler for their growth in few ways. One is provider of tech platform. Second is provider of capital. Third is advisory work. How is DBS addressing these issues? We've done few initiatives. Let me walk you through some of them. In 2020, we launched a group called Digital Economy Group. The team is based in Singapore. It has bankers based in China, Hong Kong, India, Indonesia. The key objective is to help tech companies in the growth by advising them on equity debt fundraising, Series B to pre-IPO. They also work with these companies, enabling them across alternate-based lending, platform lending, where DBS could plug in, provide capital, provide advisory services. And last but not the least, occasionally, for strategic reason, DBS has also taken equity stake in some of these companies. So Digital Economy Group also work with our corporate planning team to look at some of these opportunities. The second thing we've done is we've launched a fund called EvolutionX. This was launched in July this year. It's $500 million growth debt fund, 50% JV with Temasek. The fund focus is across Asia, including China, India, Indonesia, Southeast Asia actually. These are the key markets in Asia. Its objective is to provide Series C onwards growth capital to these companies with ticket size of $20 to $50 million. Now what we observe is Asia never had a growth debt market. Most tech companies started funding the business through equity or very small quantum of venture debt. This product was not existing in Asia, and we believe EvolutionX could help accelerate the growth of these tech companies. Also support venture capitalists, founders to minimize dilution through EvolutionX. On the enabling side, what DBS has done is they've launched two other initiatives. We've launched DBS Digital Exchange. Essentially, it's exchange for secondary trading of digital asset, including cryptocurrencies. Second, Partier. It's a blockchain-based international payment engine. So these are the initiatives that we have done essentially post-COVID to support development of the overall economy, tech ecosystem. Thank you for listening to me. Now what I'm going to do is I'm going to pass you to my partner, Aftab Mathur. Both me and Aftab are on the board and investment committee of the EvolutionX. Thank you very much. Over to Aftab.
Thanks, Amit. Hi, everyone. Pleasure to be here today. I'm Aftab, and I'm with the Innovation Investments team at Temasek that primarily focuses on the venture investing space. We are one of the newer teams at Temasek that look to track and identify disruptive trends that emerge globally and seek to invest in them and bring them to Singapore and to Asia in partnership with Temasek and with our portfolio companies. We operate across 4 key pillars. The first is our direct investments. We look to identify disruptive trends in key sectors across whether it be fintech, mobility, gaming, materials, or synthetic biology, to name a few sectors that we track. We've invested in a number of emerging companies that have gone on to become large scalable businesses. For example, in the food tech space, we invested in companies like Impossible Foods and Perfect Day, which we've actually then brought to Singapore in partnership with them. We invested in companies in the mobility space, companies like Zipline that does drone deliveries, and Einride that builds electric vehicles. We've also invested in companies in the metaverse space, companies like Within that develops virtual reality, or Improbable that does simulation software. The idea is to capitalize on emerging trends and disruptive trends in these sectors, and through these direct investments, we build long-term partnerships with them and seek to add value through our Temasek network. The second pillar is our fund investments. We work closely with Tier 1 VC funds globally that provide us with deep domain knowledge and insights, as well as co-investment opportunities. These are funds that operate across Silicon Valley, Europe, Israel, as well as Latin America, and increasingly now in Asia as well. The third pillar is actually more of an extension of Pillar 2, which is catalyzing the Southeast Asia venture capital ecosystem. Back in 2015, we began to realize there was a clear funding gap in the market. We called it the Series A and B Valley of Death. There just wasn't enough capital for startups as they crossed the seed stage and they struggled to raise money and grow. We therefore decided to play a key proactive role in building the venture capital ecosystem here and began identifying and anchoring promising GP teams to invest in, one of whom will be here later today. And finally, the fourth pillar is to develop new platforms in targeted strategies or areas where we believe there is a gap or where we believe there is a large market opportunity. These include Vertex for venture capital, or Red Dot for growth capital in Israel, or Innoven for venture debt, and of course, EvolutionX, which Amit also briefly mentioned, which is for growth debt. For this discussion, I'll focus on the latter 2 pillars, which outlines what we've done in the regional venture capital space, as well as in the growing venture debt space. So starting with the Southeast Asia venture capital space, as mentioned, back in 2015, we began to realize there was a clear and emerging gap in the market. There were many seed funds, accelerators, incubators, but as these startups grew and scaled, there just wasn't enough Series A and B capital in the market to fund them. And so we began a dedicated effort to identify and anchor promising GPs in the region. As is publicly known, in addition to Vertex, we've anchored 5 additional VC funds here, which include Jungle, Monks Hill, OpenSpace, Golden Gate, and Wavemaker. This has been an extremely successful program, and these funds have gone on to collectively raise nearly 10x the amount of capital that we seeded them with. And they've attracted Tier 1 global institutions, endowments, corporates, and fund of funds into this region. These funds have now collectively invested in well over 300 startups across the region, with a number of unicorns emerging along the way. Some of the more promising startups in the region include Gojek, Ninja Van, Carousel, Love Bonito, and LiveSpace, to mention a few. In addition to catalyzing this funding and building the growth stage capital in the region, these funds have also played a very active role in developing the ecosystem by helping and encouraging and developing regulatory support, increasing awareness of the Southeast Asia ecosystem to large global players and large global investors who started coming to the region, and also assisting these early stage portfolio companies to expand across the region. These have been very critical in building the ecosystem, and we're glad to be partners with them. And so that brings me to our next pillar, which is venture debt. With the growth in the number, as I mentioned, with the growth in the number of VC funds here, significantly more capital has emerged across the seed stage, the venture stage, and the growth stage. However, we began to realize that what was missing now in the market was debt financing. In mature startup ecosystems, whether it's in the US or Europe, venture debt accounts for nearly 10% of the overall venture capital market, and it was only a matter of time that this financing gap would be felt here as well. Back in 2015, there were very few venture debt players. If not, I could probably name just one that really operated, which was Silicon Valley Bank, that operated in India and China, but there was nobody doing that in Southeast Asia. So that's when we decided to build a new platform called Innoven. We acquired Silicon Valley Bank and launched it, starting with India, and then spread it across Southeast Asia and China. Innoven is now one of the leading venture debt platforms in the region, with over 200 portfolio companies, many of them which have gone on to become unicorns today. Over the last year, though, we've seen such a steady increase in the number of large growth stage rounds, $100, $200 million and above, that we realized the market was maturing and more debt financing would be required as these companies scale and grow. Typically, venture debt operates in the sub $20 million range, and this was too small for growth stage companies who began to actively seek and approach us and other players to raise larger amounts of debt, but they were still too early for commercial banks and the traditional credit scoring metrics that the commercial banks have today. And so that's when we approached DBS. Given the feedback that we heard from entrepreneurs as well as from VC funds, we approached DBS to explore building out this platform. And as Amit mentioned, we found clear synergies between us and DBS's own plans. Based on the market studies and discussions we've had with all the key ecosystem players, we believed this is the right time to launch a growth debt platform in the region, and are excited to partner with DBS in the journey. EvolutionX will provide loans, as Amit mentioned, in the $20 to $50 million range, and we both provide a very complementary value-add skill set. I'll let Amit talk more about what DBS is doing in that space, but for us, the idea is to see how we can deepen our relationships with companies at an early stage and broaden our offerings as well. As some of you already know, we've begun making more direct investments in the region, and while some of our larger investments are well known, some of the smaller investments that we've made, whether it be in Neum or Sociola, is an extension of what we're trying to do in the venture capital fund of funds and the venture debt platform space by playing a more proactive role and engaging with earlier stage startups as they begin their journeys and look to grow outside this region. I'll now hand back to Amit to take us through the next section of the event, and thank you again, everyone, for listening.
Thank you, Aftab. Let's move to the next section of panel discussion, opportunities and growth of digital economy. Let me introduce the three panelists, starting with Amit Anand. Amit is a founding partner of Singapore-based VC Jungle Ventures. He has been in this segment for the past 20 years, and he has invested in more than 40 startup companies. He was vice chair on the board of Angel Network Southeast Asia, and currently sits on the Advisory Council for Ethics in AI and Data by the Singapore government. Next is Cameron Priest. He's a founder and CEO of New Ventures. He was former CEO and founder of TradeGecko, an inventory and order management software for SME. Another successful exit. He sold it in August last 2020 to Intuit. And last is Robin Young. He is a group CFO of SCI Ecommerce. He has been involved in corporate finance, startup activities for more than 15 years. Now let me pass on to Aftab to kickstart the panel discussion.
Thanks, Amit. So I think let's kick off this session by talking a little bit about what each of the panelists think of in terms of the new trends that are emerging in the region. What are the 2 or 3 key disruptive trends that they're tracking? And I think it'd be interesting to hear, given each of their different perspectives, Amit as a VC, Cameron, coming from as an entrepreneur with an exit, and then also Robin as an operator in the region. And I think, as we go through this, I think it'll be very helpful to also get a sense of, as you look at some of these trends that you all are tracking, how and where COVID has actually maybe accelerated some of these changes or decelerated some of these changes, and kind of what your thoughts are on that. And maybe before even you kick off, maybe even if each of you all maybe want to talk a little bit about your background and yourselves before we kick off, that'd be great. Maybe we could start with Amit. You want to go first?
Thanks, Aftab. Thanks, Amit, for having us over. Just very quickly again, I'm Amit. I am a partner at Jungle Ventures. We are a Singapore-based early to growth stage VC that invests across Southeast Asia and India. Today, we manage about 600 million in AUM. We've got about 40-45 companies across the region and invest in mostly, or rather most of all, technology companies. After coming to your point regarding the ecosystem, maybe just sort of stepping back and talking about it from a 25,000 level. If I speak to any founder today in the market, any operator in the market, any investor in the market, I think what's been a big change from pre-COVID to post-COVID is really for a long time, Southeast Asia has been seen as more of a defensive mindset. People invest in the region because people think that there is this one opportunity that if they miss, they may not be, there may not be any other opportunity in the market. It was always seen as a market with fewer large company creation opportunities. Whereas today, fast forward, both with the development that has happened over the last 10 years and which has accelerated with COVID, every investor around the world, every founder in the region is now looking at this as a growth mindset. Everybody's coming here because they think they can find many, many more opportunities to capture the growth potential of the region. So that's certainly a big mindset benefit that has happened in the region, and we have to thank COVID for a lot of that.
And I guess thanks to you as well, right, for actually spreading awareness, right? I think some of the key, letting people know across, whether it's in the US or Europe, letting them know more about what's happening here in Southeast Asia. I think you guys have done a phenomenal job. We're starting through your LPs, but then also through the wider ecosystem. So, very interesting. Great. I think maybe we can go to Cameron next. I mean, Cameron, we'd love to hear your thoughts.
Sure. Just for a quick intro, I was the founder and CEO of TradeGecko. Jungle was one of our lead investors. We sold that to Intuit, the large public listed company in the United States last year for about 140 million Sing. So I founded the company in 2012. We've been working in the region and really building a global business since then. I think it's quite interesting actually, having sold my company, I kind of stepped back and looked at the region as well. And I was amazed at the growth that had occurred. I think we'd always been a very globally focused business. We were based in Singapore, but our markets were the global markets. And I think one of the things that was quite interesting to see once we kind of stepped back was that there was just this huge growth in businesses today that are building kind of world-class products and businesses from this region. I think we're seeing some amazing companies come out of Chennai. So we've seen that for a while with the SaaS companies like Freshworks and Zoho and Disquera in Singapore. So I think that was one of the big trends that I've been really impressed with. It's what we tried to do was to try and build we always said we weren't a Singaporean company, we were a global company headquartered in Singapore. And we're seeing that more and more with companies out of Vietnam, etc. And I think the other big trend is just, we're seeing as an entrepreneur, maybe not the seed or pre-seed stage, but at the Series A stage, you're getting San Francisco level valuations and access to capital. And that's only possible because of the quality of the companies and the quality of the teams. So, as a founder or ex-founder, and an angel investor and other founders now, I'm very impressed and, and really enjoying the massive growth and really interesting companies in this region. And again, I think so much of that's happened in the last 12 months. There's lots of trends, right? Huge quantums of, relatively cheap capital entering the markets all around the world. And obviously all the trends that are kind of happening as we kind of realize that we don't have to work 9 to 5 in a corporate job. Not that there's anything wrong with that, but a lot of people were realizing that this might be an opportunity to kind of pursue that opportunity. Yeah.
That's interesting that you mentioned that the valuations are also starting to reach sort of global levels. I think, yes, part of it is that, I guess because now you can see global investors start to make investments here without actually having to be here physically, right? People are making investments remotely. And I think maybe that's a big part of that as well, right?
That's a big part of it.
Yeah. Interesting. Great. Now over to you, Robin. What are your thoughts on what's going on over here and what you're seeing out there?
Hi, everyone. I'm Robin. I'm the CFO of SCI. So I probably would just focus a little bit on what we do and what we have noticed in our line of industry. I think it's everyone's knowledge, the whole pandemic accelerated the whole digitalization and the e-commerce industry in Southeast Asia. However, I think a lot of people doesn't realize that the whole cloud of the traffic now online actually doesn't make the competition easier. It makes the competition more and more intense nowadays. And so all the merchants and brands nowadays, they are looking for new ways to optimize their business. And that's why, nowadays we are helping hundreds of different brands from this region and outside of this region to really expedite their process to be digitalized. And I think in the process, cross-border e-commerce become a big thing. I think nowadays, if you look at the whole Southeast Asia, I think it's already become as a whole to be one of the major trading partners to all the major economies in the world, China, Europe, EU. And we helped all the brands to bring their product, the SKUs, into this region. But at the same time, we also help the Southeast Asia brands and some of very famous Singapore home brands to venture out overseas to China, to Europe. And we are very glad to see, in the last 12 months, they have been grown dramatically overseas from the cross-border transactions. That's why as one of the largest player in the region right now, SCI is very proud to have those bonding partners together to grow this cross-border business theme together.
Yeah, very interesting. And how in the last 12 months, just given I guess the work constraints, how are you able to help with scaling up that infrastructure? Because even the infrastructure that you all needed to be able to help some of these companies, how are you able to do that, just given the constraints of work from home and things like that?
I think that's a very good question. I think people, when they talk about the whole Southeast Asia market, people always talk about it's a great market, it's a good number of population, very young generation of the consumers. But the people usually won't realize when we talk about Southeast Asia market, we are not talking about a whole market as one single unity market. We are literally talking about 7 to 8 very different markets. So the barrier of entry is there very, very big. And SCI, we are fortunate enough to have this kind of coverage to cover the whole Southeast Asia region, all the major ASEAN countries, as well as China. And at the same time, we really have the so-called dual-way capability to facilitate the traffic between ASEAN and China, which arguably two are the most important trading partners in today's world economy. So I think to have this kind of the digital optimizer who can really cover the region and are beyond the region for these cross-border transactions is very key to the brands to be successful in this region.
Yeah, interesting. And I guess taking that theme, I guess even to the work that you all are doing, are you all seeing, even with portfolio companies or even with founders right now, are you seeing, because of COVID, they're able to expand across the region as well as, one of the challenges where everybody said, look, you do something in Indonesia, it's more Indonesia focused. You do something in Vietnam, it's Vietnam focused. But do you think with COVID, and because people can work from home and do things from home, that the regional expansion and potentially even more global expansion is happening because of COVID, it's allowing that to happen or not?
I'll start. So, after for us at Jungle, we've always held this core philosophy that the world is getting flatter by the second. And our belief actually is that when you look at Southeast Asia, you got to look at Southeast Asia both from a consumption perspective and operational perspective from a different lens. I think as far as the consumption behavior goes, whether it is a sort of the actual end consumer or a business, the region is becoming more and more homogeneous by the day. The reality is that the 27-year-old today in Jakarta and a 25-year-old in Singapore or a 23-year-old in Bangkok is no different from each other. She has been brought up on the same digital platforms. Her aspirations are the same. Her inspirations are the same. She wants to create an impact in life. She wants to be an entrepreneur, and many, many other similarities which are binding this very large population together on the consumption side. But to what some of my sort of panelists mentioned, the region is still fragmented from an operational perspective. You still have to go and hire people in 11 different countries. And you have to understand what motivates each of these individuals despite their commonalities. And so that operational complexity is a great barrier to entry. Again, it was mentioned earlier. And I would think that entrepreneurs today with COVID have been forced to think beyond that barrier to entry. They have been forced to accelerate some of the practices around employment. How do you go and think about hiring people at scale without having to travel to different markets? How do you create a culture in a fragmented geography without again being on the ground or bringing everybody together? And it's fast forwarded to your point, the development of the region significantly. We are seeing in our portfolio, companies would take at least 2 to 3 years to go to 3 or 4 markets from their home market. Today, within the first 18 months, our companies are in 5 or 6 markets in the region. So it's we're going to see a completely different Southeast Asia in the next 10 to 20 years.
I mean, I think with the company I founded, we were serving customers in 100 countries. And I guess the stage that I was at, and the kind of the companies that I'm supporting or making angel investments in, you're either global or one market when that pre-seed seed stage. I think trying to do more than 1, 3, 5 markets seems like spreading yourself too thin. So it's either all online, which is like what we were. So we weren't geographically bound by any market, or it's focused on one geography. So you've got to pick your market. And usually that should be where you're based, or it's, as I said, or it's the whole world. And that's kind of what we went after. And I think both work, but I think they're just different strategies.
Yeah. And then do you think, especially in your case, do you think, right now everyone's talking about deep tech, enterprise tech, and all that emerging in this part of the world. Typically it's been more B2C, but now more of this enterprise software is emerging. What's your sense of that over here in this part of the world, just especially given your vantage point? Do you think there'll be more build for global from here, or will it be more regional?
Definitely.
players?
I think a couple of trends, right? One, huge amount of that great software is already developed here in Bangalore, for example, in Chennai and Vietnam. And I think we have a huge quantum of high quality engineers, product people. What we have historically lacked is kind of globally great go-to-market brands, etc., and businesses that really know how to go to the international markets with that international quality. But I think that's shifting. Again, Freshworks obviously recently going public. I think that's accelerating. We're seeing amazing companies going global from day one, from Vietnam, from Singapore. So I think whilst we might have been one of the earlier ones, we now have PatSnap from Singapore, but they're obviously kind of focused globally. I think we're going to see 1,000 kind of these amazing B2B software enterprise-focused businesses built out of here, and that's more and more possible. Yeah.
That's fantastic. Are you also seeing the same thing?
Yeah, I think it's a combination of the ambitions of the founders growing, as much as it's also dependent upon the ecosystem that is supporting these founders. I still remember back in 2012 when we started in Singapore and started talking the language of building a global company from here. It was hard not just for us, it was hard to bring on employees on board the firm that would believe in that. It was hard to find founders that would believe in that, and forget the limited partners. But I think to Cameron's point, we are now living in an environment where every participant, every stakeholder, shareholder believes in that. And when you have the belief, I think everything else comes together. There are enough success stories now. There is enough muscle memory in the ecosystem, whether it's talent, capital, that will help achieve more and more of this. I do think, though, one has to realize that it's one of the hardest things to do. Probably the success ratio of building a global business is like 0.000 something percent. And so you got to be very selective about which companies can be global. What's the best approach towards going it? What team do you need? What capital partners and other partners that you need? And I think this is where ecosystems are very important. And I believe ecosystems like Singapore, Bangalore, for that matter, have all that ingredients. Thanks to the governments here, thanks to the talent here, thanks to the large companies here, we have all the ingredients now to continue to build this and churn out more and more global companies. So certainly from a Singapore perspective, I think the expectation and the probability is high.
Yeah. And Robin, what about you? I mean, you all are seeing it. You all are building it out from scratch from here as well. What is your sense in terms of how you guys are thinking about sort of the regional as well as global expansion?
I think for us, there's the global expansion particularly relevant to us because we are in the cross-border business with so many brand partners and merchants nowadays. And it's very interesting to see that nowadays, those international brands and merchants, they use Singapore as a very, very important international hub not like the older days for the trading business, but more from the digital consumption standpoint. And we can see a lot of innovations, entrepreneurs, and they use Singapore as a base to really sell their product, the services to US, China, and other countries within the region. And the whole process definitely has been accelerated in the last 12 to 24 months. And I think if you look at the whole e-commerce industry nowadays, the brands, the merchants, they're not just only looking at one channel, but instead of the omni-channel strategy. That's exactly how we add value to those brand partners. On the other side, you may see the new channels, for example, like social commerce, become more and more a big theme in the region. And I think if you look at the data in the last 12 months, the social commerce consumptions in the region have more than doubled. And it is still growing at a very fast rate. And at the same time, I think if you look at the Generation Z, like we mentioned just now, nowadays they are not just learn the latest dance move from TikTok. They also buy from TikTok. And nowadays we are helping many regional sellers, merchants actually sell on those social media platforms rather than just put the advertisement and attract the traffic. We actually make the sales happen through those social medias, and they are more arguably effectively to reach their end customers and make the GMV, which is most important to all those brands.
Yeah, very interesting. Amit, I know I've asked a lot of questions. Do you want to go next?
Sure, thank you, Aftab.
Yeah.
I want a little bit switch gear and a bit ask question in relation to what DBS Temasek has done, the EvolutionX platform. So I wanted to ask, historically we have seen most tech companies were funded by equity, either by founders, venture capitalists. So my kind of first question is, do you see there's a change of mindset where both the founder, operator, VCs are more open for a wider capital structure, beyond equity to a more debt-like or convert structure or preferred structure? So maybe I'll kickstart from there. Amit, maybe you can start.
Yeah, so as a starting point, maybe just let me just talk about the fact that even today, despite all the growth that Southeast Asia has seen, India has seen with regards to venture capital dollars, we are still significantly underpenetrated. I think we did a back of the envelope study some time back that for every internet user in China between 2015 and 2020, the amount of dollars invested per internet user comes to something like $400. But if you took the same number for Southeast Asia, it came to like $40. So there is, while I agree that the per capita GDP in China is big, but it's not trivial in other parts of the world either. So I think there's a lot of digital infrastructure dollars that are required here. And in that perspective, I think you guys are a first mover in this very large and emerging category. And so I think there is a lot of scope. I think my belief is always that for every product, every offering to be successful, the timing has to be perfect. Most of my failures in life has been poor timing. So I've learned a lot through them. And from my perspective, I think the timing for debt-oriented products, especially in the growth stages, today is the right stage. If you look at the underlying portfolio companies of Jungle or any of our peers in the region, what you're going to see today is that companies are scaling very, very rapidly. These companies are not growing at 50, 60% year on year. These companies are growing at 200, 300% minimum year on year. And when I talk about growth, I'm not talking about consumption growth only. I'm talking about revenue growth, profitability growth. And so when you're growing at that pace, it will take more than a village to raise a kid. But more importantly, you have the ability to service debt and still be a healthy company. So from an early stage investor perspective, and from a long time participant in this ecosystem, I think the companies have gotten to that maturity today where there should be a lot of availability and acceptability of a platform like this.
Cameron?
Yeah, so I mean, in my experience, we did raise some venture debt at our two of our rounds. I think the biggest lesson that I took away and what I am seeing in the region is equity is great when you're kind of, and it's risk equity, it's venture equity, right? They're taking a risk, and that's why they get the massive returns if it works. But So you should be looking at using venture capital and venture equity to de-risk and build the business, or try and build the business. And then debt's a great solution. And what we used it for is once we had a machine that was working and we wanted to plumb more growth through, and equity's expensive. So venture debt enabled us to kind of continue to scale and grow and, put, money into the machine that was having really good unit economics, and scale that machine. And so I come back to, I think, in the future, it's going to look like you're going to use venture capital to de-risk or to prove or to ideate or to experiment. And then you should use other forms of capital to scale, because using equity the entire way becomes very dilutive. And if you've got a machine that works, that's generating profits that you can service debt, then you should. And that's kind of what we did. And that's what I would always look to do in the future.
Thank you. Robin, for you?
Well, I guess for us, to Amit's point, the company has been growing at a very, very fast rate nowadays. So we look at our balance sheet very carefully at both equity and debt. And I believe, each company are different. So probably, our formula cannot apply to all other companies. But from our perspective, I think that if you have to find a fine balance between the equity and the debt. And particularly as a faster growing internet company like us. So we typically want to have the long-term partnership with both debt provider and also equity provider. So thanks to our investors and also great banking partners, including DBS, along the years we have been able to grow the business significantly in the region and beyond. And that's, I think in this scenario, is particularly relevant to have the partner like DBS to really have the operations outside of Singapore, across the region, and to most of the countries we operate. Hand in hand, really help us to grow the operation and the business over there in different ASEAN countries and nowadays in China. So I think it's very important to find such a long-term banking partner relationship and build the trust as the founder, as the entrepreneurs. I think that's really, really relevant.
I think my next question would be, if you look at more developing market, that market has a lot more deeper growth debt. Asia is slightly behind. Asia had VC and then venture debt, very small ticket size. So when between DBS and Temasek, we start landscaping the market, we realize that there aren't many providers. So the question really is, do you see a fund like EvolutionX? And also we are kind of selectively using DBS balance sheet. What role it could play in terms of overall expansion of the tech segment? It's a wider ecosystem. I think both of you talk about earlier segment about how this entire ecosystem is growing. The pace of acceleration post-COVID is absolutely significant. We'd love to hear your views about how this could become a catalyst for the growth.
Listen, I think first mover advantage is phenomenal. And we started in 2012 with a small $10 million fund. And embarrassingly, we were the largest early stage fund in Southeast Asia in 2012 wow. with $10 million.
Now today it's at $600 million.
Today it's $600 million and growing as much as our startups are growing. So in that sense, it's great to see you guys have the first mover advantage now in a market which is going to only grow from here. I'm going to take a leaf out of Robin's book around looking for long-term partnership. I think experience has taught us that venture investors and debt investors are very different mindset. Debt investors, typical debt investors are always most interested in the yield, most interested in the short-term value creation that happens in the organization that they can benefit from. They are not looking at a long-term horizon. Building a startup has many, many ups and downs. And we've seen entrepreneurs, find it very challenging to work with debt providers when the chips are down. And I think this is where the legacy of Temasek and DBS comes into and becomes an extremely important value proposition. Because you guys are long-term contributors already to the ecosystem, and this is another piece of the puzzle that you're offering. I would encourage both the founders as well as you guys to have a lot more education around how companies can leverage debt better, what are best practices, when debt is not a great, to Cameron's point, when debt is not a great, option. And so from that perspective, I think there's a fair amount of education to be done in the entrepreneurial ecosystem. There aren't too many great CFOs like Robin who know how to balance things between equity and debt. And that would be, I think, a good starting point.
No, thank you, Amit. And I think from our perspective, I think what we are seeing is you're correct. That's why the structure, I think we think about would be not a high coupon where you burden the balance sheet or cash flows of the company. It's more about balancing coupon versus future growth. So I think we're working towards that direction. Cameron, would love to hear your thoughts.
Yeah, I think I was going to say something similar to Amit, which I think one of the missing gaps in this market, which would be an amazing area for you guys to help, is understanding what different capital structures can look like. It's very straightforward. At least I think most founders understand what it means to raise equity and to sell equity and to get capital from that equity sale. But we are now seeing innovations in revenue-based financing and all these other different structures, M&A financing, etc. I think that's a new area for a lot of startups. And I think, frankly, what we're going to need to see is innovation in the space and then education, to support, the understanding of what people can and should do with this sort of thing. Because on the flip side, debt can get you in trouble. Not that you can't get in trouble without debt. Debt it's leverage, right? It can accelerate your growth, but it can also accelerate your issues. So that understanding, a lot of startups, setting up a strong financial organization is not the first thing a lot of startups do. And I think there's going to be a lot of important lessons for people to kind of get their head around and understand when and where it's applicable and what the different types of debt and when they make most sense. And I'm sure we're going to see more innovation in different startups, with companies like Pipe in the United States. I know there are companies here looking at similar kind of solutions. So potentially partnering or kind of educating with those other companies would be very interesting, I think, for the startups of this region.
Thank you, Cameron. I would say I'll share two perspectives. I would say from DBS as well as both EvolutionX perspective. So we've created EvolutionX as a little bit more open platform where it could also do structured solution, not just capital debt as well, i.e. securitization structure, a bit more innovative. Whereas from a DBS standpoint, we work with a lot of platform where we provide like analytics-based lending or a platform lending. Whereas not a balance sheet like tiered above equity, it's more about helping you to sell more, support your ecosystem. So we're kind of trying to expand or educate the market in that way. Robin, your thoughts?
Thanks, Amit. I think what you mentioned just now is really, really important to the entrepreneurs and the internet company nowadays in the region, because I guess if you just thinking about the whole debt as a provider, then you are no difference to like so-called traditional banking partners. I think what DBS has done greatly is how to think about how you can actually build your product into the actual business, the founders, the entrepreneurs they are trying to build. And then leverage on the innovation, leverage on the technology, and also including the open platform, open structure. We have working with DBS, I think it's since about 2 years ago, and that's exactly what we have done, developed together with the tools, technologies, solutions provided by DBS Open Platform. And nowadays we are actually integrating our services, our technology together with what offered by DBS to accelerate our business. I think that's really relevant to those entrepreneurs and internet companies. If you are telling them, I can provide you the debt, but at the same time, I can also help you to accelerate your technology and the solution offered to the customers.
Thank you. Now, I couldn't stop myself asking this last question to all the panelists. Please comment on what you see developments happening on a SPAC, but also the rule which Singapore has kind of, started about a few months back on SPAC. I mean, give me some of your perspective in terms of, SGX regulation and SPAC.
I guess I'll go first. Firstly, I'm a huge supporter of the initiative. I think we have to give it a little bit more breathing space. We have to consider it, in the same vein as a startup that is trying to solve a problem that exists in the market. That's a perennial problem that exists in the market. There are, participants that are coming together to solve that problem. And so, our approach would be to be extremely constructive towards that. I'm sure there are going to be iterations. We may get out with a great version 1, or we may not get out with a great MVP. But we have to go at it because this is a problem that needs to be solved. So at this point, we are, at least from our perspective, it's sort of 100 points on 100 for attempt, and an encouragement to the entire ecosystem to contribute towards making it more successful, as against to, passing judgments very early on. This is a journey that's going to take 10, 20 years to make us into as successful as most of the other developed markets are in this space. And I think, people behind it, SGX, Singapore government, Temasek, everybody, you all deserve kudos to giving it a shot.
Great, thank you. Cameron, quick comments?
Yeah, quickly. I mean, I think it's fascinating. I mean, one of my early investors was a gentleman called Magnus Bocker. He used to run the SGX. He had some strong opinions about where they were and weren't going. Sadly, he passed away, but he was a great supporter. And I think if you look at Australia, you look at Japan, you've got this kind of, even Germany with the Mittelstand, you've got this kind of mid-market group of liquid companies that doesn't exist in this region. And I think, critically, we're probably going to still have the really big boys go to the NASDAQ and the NYC, as they probably should. But having that kind of mid-market grouping of great public companies that we just don't have right now, I think is really important for Southeast Asia, and I think Singapore's got a good chance of being that. And if SPACs are the way to get there, I think that's a great way to get started. So, I mean, I don't know all the details of all the paperwork that they're doing, but I'm excited to see if this is what gets us to that next stage. I know we've been trying to get to for a while as a country, getting that SGX liquidity and the sizes and the companies on there. So it'll be exciting to see what happens.
Great. Robin.
I probably won't be able to comment too much on that, but I think it's always good to see there are different options available for the capital market.
Thank you. Aftab?
Yeah.
What do you?
Well, so from our side, obviously we are, we're on the recipient of a number of SPACs that are looking at our portfolio companies, but that's more outside, that's more the US and Europe. But I think for us, we are obviously very supportive of what's happening over here. We're building a number of different vehicles as well that some of my colleagues who are working on it as well, and we've announced some of it in the press as well about building enabling vehicles that can support the growth of companies here, building out companies here, getting the pre-IPO stage, and helping prepare them for potential listings and supporting of the region. We ourselves aren't doing any SPACs, but we're supportive of those. Mm-hmm.
Thank you very much, gentlemen. It's great having you all here. Thank you.
Thank you.
Thank you.
Thank you.